think we can't hear your colleagues.
G, can you hear me now?
We can hear you clearly, yes.
Okay. So, I mean, if we look at the company, it's a legacy of 100 years. The company was established in Pakistan in 1953 and subsequently listed on the stock exchange in 1972. And obviously, the retail sector was launched direct as business to consumer from 2003. The shareholding structure is listed. Go ahead. So if we look at the sales, you can see that the company relies on domestic sales to the extent of about 50%, and then the rest is distributed between Europe, North America, and others. As you know, Ideas is being hived out as a separate entity, and that company would be a separate company from September, October, and it would be the results would be separately listed backdated from January 2021. So please go on. If we look at the export sales, they're mainly driven by home textiles, where our largest customers are IKEA. Obviously, we also have a large customer base in Europe and the US. We have Joanne and Urban Outfitters, Next, Callanel, Carrefour as well, making up major customers in our home textile segment. But however, IKEA has been continuously growing. Other than this, we have an institutional and hospitality sector that is doing very well. And that we see is continuing to grow as well. And the company's sales have registered a tremendous growth in the export sector. We've closed close to about $280 million. And next year, we're looking to grow to about $330 to $340 million in exports. Let's go on. The spinning capacity has been driven mainly by our new Autocoro yarn. And mainly, if we look at that, that has been extremely good for the company in terms of its cost efficiencies and its raw material yield. The current capacity stands at about 70,000 tons, and this will increase to about 90,000 tons by December per annum. There is 100% utilization and very good margins on this business at this time. The retail chain closed at roughly approximately 18 billion for the year, where e-commerce was constituting almost 20% of the revenue, which is good news. It's been a significant jump from last year. However, still this year was impacted by COVID-19 and its restricted timings in stores. We now have 110 stores in 45 cities. We have remodeled several stores. We have opened more stores. We continue to evolve and change. However, over here, we have had a loss of revenue, but we feel that next year the revenue would enhance considerably, given that we do feel Pakistan will start to get a grip on COVID-19 far better by September or October of this fiscal year. Again, this is depicting e-commerce sales. So we have crossed the 3 billion mark. It's a significant jump. And we do feel that our e-commerce platform is growing. Now we're going to bring in a host of other areas where we're going to integrate into our e-commerce, which will be beyond home and fashion apparel. And we will be announcing these integrations soon, inshallah. Again, just showing you capacity achievements. So its capacity is fully utilized, and we expect it to continue this way, even with the increased capacities coming online this year. So we do expect that this year we've closed at approximately 90 billion rupees for the year. We do expect about another 20% growth in the next fiscal year, inshallah. So we do have challenges where we have increased raw material prices. We have a volatile exchange rate. Again, we have the US dollar now in our favor. As of now, this quarter, it looks that way. The current account deficit in the country is growing, and exports are going to be more and more valuable. Retail can have an issue in terms of the restricted timings, but we hope that not so much so. And we do hope by September 1st, we feel that retail will resume full-time hours again. We do feel that because of the upcoming month of Muharram and August 14th holidays, that the restrictions may continue in Karachi at least until the end of the month. Gas availability can be an issue in the winter months. We've taken measures where we've taken 40 to 50% of our supply chain onto oil-based power generation if need be. And increased gas rates are always possible because of international markets. So again, in terms of expansion, we've expanded within our home textile category where we've added a 30% expansion. That capacity is now fully utilized already and sold forward through to January. We expect it to be sold through to June. Knits and knits processing, the knit processing unit will come online by August 15th. It will go into production. It is already fully sold. It will add about $25 million to the company's top line in the first year, and maybe the building has the capacity to add about another 100% expansion, which would take it to about $50 to $60 million in the year after. Surgical cotton will come online in November. This is a medicated surgical cotton going into the spun lace segment. It's a very specialized and unique segment. Eventually, we will go into the spun lace lines ourselves. This also will add about $20 million on an annualized basis, but the production line will come online in December of this year. In retail, we are going into fragrances, and this is a big segment, and we expect that this would add ₹1 billion to the retail segment in the next fiscal year. Again, latest state-of-the-art spinning. We have a vortex spinning unit, which will now come online in 2022. Other than that, 2021, the full spinning capacity will come online by November, December of 2021, which would be adding another 20,000 tons per annum this year. I think we can go on. I think the numbers are in front of you. It's been good. We expect the year to be good. Obviously, with a lot of expansion, we do require working capital. We have grown by about 35 to 40 billion rupees this year. We expect another growth by about another 30 billion rupees next year. So inshallah, that being said, the company will deliver good returns. So again, we see the 9-month picture. The 12-month picture is about 87 billion for Guk Ahmed, and consolidated would be over 90. Profits, we do expect it to be in the range of about 6 billion to 6.5 billion, inshallah. I think we can keep going. If somebody has questions at the end, then we can come to those specifically. Again, substantial business growth in almost all segments. Let's go on. So as you all know, I'm in the US and on US time. You can go ahead and direct questions now for the next 10 to 12 minutes, and we will try to answer them the best we can.
Thank you, Zaki Saab. This was very impressive, and for me, just the numbers were so impressive in terms of growing so much, have ROEs of more than 26%, and the stock is trading at 4 times PE. It's just hard to believe that. How to rationalize as a financial analyst, how to rationalize those numbers. There's a question, just kicking off with the first question. Farouk Samir is asking that, have you considered listing on Amazon in addition to your existing e-commerce channel?
Yes, we will be listing on Amazon, but we don't want to dilute the ideas and Guk Ahmed, the brand. So we will be listing on Amazon, but with specialized brands and using our product and our expertise, but without dilution of our existing brand.
Got it. Thank you. The second question, Sana Khan is asking that sustainable sourcing, that is alternative fiber source from agriculture waste, is a growing trend from end customers in Europe especially. How is the management seeing this opportunity from an export perspective? And how can textile industry and Guk Ahmed in particular capitalize on it, or is it too early?
So I would say that Guk Ahmed is the largest player in the pre-consumer and post-consumer waste markets in Pakistan right now. We have the largest installed capacity to utilize pre-consumer and post-consumer waste, which would be to the extent of about 50,000 kilos per day, which would be far greater than any other company in Pakistan that I know.
Thank you. Guk Ahmed is asking, can you briefly tell us a bit about your power consumption pattern and the rate for the company?
Yeah, our power consumption is roughly about 48 to 50 megawatts. We have more generation coming in, which will take it to about 70 megawatts. The power is all based on gas, and the gas rate prescribed by the government of Pakistan, based that we are in the province of Sindh. We have a preferential gas rate, which is of about 786 per MMBTU. Other than that, the new engines that we have installed are now all tri-fuel engines that are coming in, and about 30 megawatts out of our 60 to 70 would be based to be able to run on oil as well. So that would give us the flexibility in case of any load shedding or pressures that go down, that they would run on oil. Also, we have increased the number of boilers, and the new boilers are also dual generation, which allow it to run on oil and gas in case of a gas shortage.
Thank you. This question seems to be very popular. It was asked to your peers as well, and so I'm combining two questions. One is the outlook for the cotton prices in the US, its impact on your exports, and secondly, how much cotton have you covered and what are the rates?
Yeah, we have covered cotton till January at about 84 cents, and then we have covered January to March at about 90 cents.
And any views on the US cotton prices and its impact on your export?
I think it's highly volatile, but I think the most important thing is a supply chain constraint, that even if you go to book cotton now, you're going to get delivery after 4 months minimum. So you're already sitting in almost August, and if the earliest you can get cotton now today is November in Pakistan. Other than that, local cotton is available where the prices are volatile and the quality is not so good. But the company is keeping its sort of mind and supply chain open to consume local cotton to increase our imported cotton stance and position.
Thank you. There's a question from Aisha on the Delta the rise in COVID and the Delta variant. Does it change any outlook for you? Do you think?
As of now, no. We have seen a significant increase in the dollarized price of our goods, which will kick in from October. So we are seeing a massive jump in prices and margins from October of this year. Most of our customers have built in now the new yarn prices and the new cotton prices. So we will see 60% of our customers increasing their prices from October, and the balance 40 increasing them by January. And the average dollarized price increase, which we would see, would be over 15%, and in rupees it would be over 21%, and on our export sales. So that being said, with an export of about $25 million a month, the contribution margin of that would be somewhere around, over $4 to $5 million a month. So if you look at that number, that's somewhere around 700 million rupees a month, inshallah.
Thank you. I'm conscious of your time, so I'll just quickly squeeze in just two last questions. One is that you spoke about the expansion plans. Can you give us some timelines on when they will be fully operational?
Yes, I did tell you about the home textile expansion that has already come online and that is now fully running. And you will see the results again in October as the new prices kick in, because right now we're at old prices. In home textile, we sell goods very long. The knits expansion is going to come online from the middle of August, so you would see results from September. The surgical cotton expansion will come online from December. The spinning expansion will come online from October, November, and December, and add another 20,000 tons, which will be visible from January the fiscal year. The retail expansion is ongoing continuously, and we do expect a 20 to 25% growth. again this year, and we will see the retail hive out in our next set of accounts, inshallah, and we will be ready for listing come November, December, inshallah.
Great, thank you. There are a lot of questions, but I'm just conscious of your time constraint. So posing the last question from Syed Manip Imam, and he's asking that about Idea's IPO. Can you give some clarity on the transaction structure? How much shareholding would you retain after?
Yeah, we would be looking to put about 25 to 30% into the market, which would cause a significant free float and a significant generation of equity to grow further and have further expansion plans. And it would be the largest retail sector IPO in Pakistan. So inshallah, we're engaged with companies to do this, and we have taken all of the stakeholders on board, and we are in the court process of separation, and inshallah we will get all approvals by September, and that being done, we will be ready for the next process to list.
Great, thank you. I will just squeeze just one last question, because I've asked this to your peers as well. And in terms of outlook, do you think the government is giving a lot of incentive to the sector, and we have seen a pickup in exports? Do you think the next 12 to 24 months will be better than the last 12 to 24 months?
I think that if you look at the last 12 months, like I said, we've grown in excess of 40%, right? So 45%. So if you look at a company growth rate on our size now hitting 90 billion, it becomes, in percentage terms, not as easy to grow, but we do foresee a 20% growth per year for the next 2 years also. So that being said, a lot of that contribution will come to the net profit area.
Great. Thank you so much for your time. This was very, very insightful. And sorry for people whose question I could not ask. It was just because of Zaki Saab's time. Thank you, Zaki Saab, for your time and for this presentation.
Thank you. If there's any other question, I do have another 5 minutes. I'm able to take more questions.
Oh, great. Thank you. So I'll just quickly just ask, how does the ban on Xinjiang cotton in products shipped to the US impact Pakistan industry?
I think it impacts us positively in the sense that the US is very clear now that they will shift more and more business outside of China. In the US, I've had several meetings here with people, and it's very clear that they are going to limit their purchasing from China on finished goods, regardless of where the cotton is from. So Pakistan has an opportunity, likewise, so does the rest of the world. So it's not that Pakistan has an uneven opportunity, but they do see Pakistan as the only other printing resource in the home textile industry. So I do see the home textile industry benefiting greatly from this.
So moving to with that, the next question that, is your target of 20% growth a bit conservative, given the fact that, there are these opportunities and you're also adding capacity?
That 20% growth is dollarized. So if your exchange rate changes, you'll have bigger growth.
Got it. Next question. People have complained about government policies and energy crisis, your peers in the textile sector. What has changed? Have you seen any change in the current government's policies towards the sector?
I think the government has been very pro-exports and very pro-textiles. I don't want to say more at this stage. I think that they've provided energy at the best rate possible. They have been very conducive for exports. They have not had a fixed exchange rate or tried to hold an exchange rate, which is good for exports and imports, that we don't get stuck in any cycles where it is misrepresented and it is a reflection of our real effective exchange rate. I think that it's important. Let's see what comes with the textile policy and the DLTL scheme. We're expecting some announcements within the next 1 week.
Okay. Best of luck with that. The next question, how will the wage parity between Sindh and federal area affect your financials?
Well, the Sindh government has not gone about it the right way. They have done it illegally. So it will be challenged in court by us and the Employers Federation of Pakistan because it's not legal. The minimum wage board did not recommend the wage. Hence, it should not have gone to the finance bill and should not have been passed. So I do feel that the legal system will take note of that and will prevent that from happening and will keep it in line with the rest of the nation or where it was. That being said, if, God forbid, this were to happen, it affects the cut and sew sector the most, where we have the largest labor population. So if we feel that at any time this is going to impact us, the company has sufficient lands in Balochistan, which is just across the border to move across to the province, which is just next to site.
Thank you. And the last question